Good afternoon, good evening, good morning. I apologize to my man. I've been running late. Hey, it's the real estate experience with me, TRAVON Smith, the only place you can get this kind of information like you get it. This is one of my favorite guys, one of my favorite lenders in California, where I use him for. You should too. Get to know this man, follow him, research him. It's Mr. Armond, the giant lender. I mean, literally the giant lender, because he's tall as I don't know what. But go ahead, man. How you doing today?
I'm good, brother. I'm good. Thanks for having me on the show.
Yes, sir. Talk for the people that may not have caught the first show. Go ahead and tell them a little bit about yourself, and most importantly, where they can find you at, because everybody needs a great lender.
Exactly. So, again, Armand, been in the business for over 10 years. You could find me on Instagram, The Giant Lender. You can shoot me a text or a call, 626-823-8278, or message me on email, armond.ohan@gmail.com. So that's my contact info. Again, been in the business for over a decade. We do residential financing, commercial financing, hard money lending. If you need a loan, we have you covered.
Definitely somebody everybody should get to know, including real estate agents and clients. I always tell customers and future clients, hey, reach out to these lenders. They don't mind having a relationship with you, and helping you through some problematic situations when they do occur, like the situation we're in right now, kind of, sort of, that some people may refer to. Let's talk a little bit about the market and where it's at, and maybe some things that you got going on.
Yeah, definitely. So, we all know the rates are high, right? So the Feds last week came out and hit us with a blindsided another rate hike by about a 0.25%. So even though the intention of it is to lower inflation, which it has been, they're still not budging. They just say, hey, you know what? We want to raise it another quarter and see what happens with the direction of the market. Now, they didn't talk about the next rate hike, so I don't think there's going to be any more hikes. However, rates stand in the sevens, right? So you're going to be somewhere around 6.75 to about 7.5. That's the average going interest rate for conventional financing. And I think it's going to sustain that rate. And this is going to be the new norm going forward until the end of the year into March. I think by next year, Q2, maybe Q3, we'll start seeing rates come back down, probably closer to the elections. But it's where it's at, right? But a lot of buyers have been getting comfortable and just understanding this is the normal rate, and they're moving forward again. They're getting off the sidelines. So I've been seeing a lot more activity, a lot more offers on homes. So instead of 5 or 10, there's still 20 or 30 offers on certain homes, and depending on the area. So that's what I've been seeing with interest rates and where the market's headed.
And for the people that missed the first show, you kind of forecasted this right here. So you just said, it may not go down till March or whatever. So I'm gonna go ahead and give you the benefit of the doubt and believe you, because you kind of, the last time we talked, you kind of told us, hey, the interest rates, the Fed rates are gonna hike, spike up a little bit more. So you're a man that studies your craft and understand what they, generally what they're going to look like. You might not be 100% right, but you're at least 99.1.
Yeah, exactly. And no one has a crystal ball. But what's funny is when inflation was as high as 8 or 9%, when it started coming down, I was thinking like, hey, by the time it hits 4 or 3% inflation, the rates should start coming down, but it didn't. The rates just kept it where it's at. So I'm sure there's other reasons behind it. I'm not going to speculate. I'm just going to use the data that they're providing us and just say this is the normal rate. Now, there's a few things I want to talk about, but I wanted to ask you. Well, I wanted to kind of leave it there, see if you had any other questions about the market before I jump into my next topic that I've been experiencing a lot with condos.
Okay, before we get into condos, now we all kind of got off. I just wanted to touch back on the Fed rate going up. We all kind of got like blindsided with that, correct? Like
Yeah.
we thought they're going to flatline for a little while or plateau.
They
So
they they did say we're going to pause in June, so they paused it in June. But as soon as July came out, there was rumors and talks that we might raise again. And then once they had their meeting, it was a 2-day meeting. Wednesday they came out and said, yes, this is it. We're actually raising it by a quarter. And that's what happened. It was a blindside.
yes, sir. Let's talk about those condos. What's going on? What information we
All
need to know
right.
about condos?
So everybody knows that California insurance companies are having difficulties being able to sustain a profitable business model because California is becoming very expensive to insure. So what's happened is naturally it's just raising costs. It's some of them are even backing out of California. So I think it was State Farm. State Farm's no longer insuring residential properties in California. And a lot of other insurance companies are having a hard time insuring properties too. So I had a client buying an investment property in Yucca Valley. I couldn't find an insurance company for him for the life of me. We probably called over 20 brokers, and finally we got someone that got him a coverage. But he had to piggyback it with a California fair policy because the insurance company didn't want to absorb all the risk. So we had to not only take two policies, a California policy and the insurance policy, to kind of combine them together to get the proper insurance to get the financing needed. So what's happening is, on a larger scale, condominium buildings, they have HOAs. HOAs have a master insurance policy. See, when you buy a home, you have an insurance policy that covers the whole house. But when you have a condo, there's two policies. One's the master, one's a walls in policy. So if I'm living in a condominium, let's just say my truck right here is a condominium. The insurance is covering everything inside this place, right? My policy, my HO3 policy. But outside of these walls, there's zero coverage. That's where the HOA master policy takes over. Well, what's happening with the master policy is, as they're coming due every year, they renew. Their insurance agent is saying, hey, this year the policy is going to be a double or triple because their costs have gone up. Well, if they triple the cost of insurance, the HOA can't budget that in. They're looking at their numbers, their profit and loss. They're saying, well, what are we going to do all this costs? We can't just go to our I don't want to say tenants, but our community and say, hey, we're raising rates by $200 or $300 a month to supplement this. What they're doing is they're just cutting the insurance premiums. So they're dropping them. They're going for more affordable policies. So what they're doing is they're going for, instead of true costs, they're doing replacement costs. So for example, let's say the roof leaks, right? The insurance company is going to say, well, current market value is $100,000 to fix this roof. But when you bought this, when this roof was built, it was built at a $20,000 rate. So the insurance company is saying, well, we're going to go off that original $20,000. You need to pay for the difference. Again, because it's a more affordable insurance policy. Well, those HOAs are going to dip into their reserves. So two things are going to happen. We're going to see some chaos happen with condos. It's just so new. It's happening in the past 2 weeks that we don't know what's going to happen. But I think there's going to be a lot of regulation changes with condominiums. And what's going to happen is, if you're a buyer or if you're an agent working with condos, whether you're taking it out as a listing or whether you're getting into escrow to buy it, you need to make sure that insurance policy has the coverage is required. So run it by a loan officer, run it by me, because what happens is, if you get into underwriting and the underwriter catches it that there's not enough coverage and you're 2 weeks into escrow, you might have already removed contingencies. If you don't have the proper coverage, the underwriter is going to decline it. So now you have two options. We're 2 weeks into escrow. We have no contingencies. Underwriter calls it out saying, hey, by the way, we just got the premium and it's not enough coverage. Call the insurance company and tell them to increase it. Well, again, it goes back to the board. So now the HOA board is going to say, well, it's too expensive. We need to go to a board review. It's going to take a couple of months. Well, you're in escrow for another 2 weeks. You need to close it. It's declined, or you need to pivot to a non-warrantable loan. Non-warrantable loan can finance this property, can get it done, no issues, but it comes with a higher rate. So be cautious. Everyone needs to be understanding of what's happening with these condominiums and to protect themselves, to make sure that they don't run into issues. So that's what's happening in the condo world. As I get more data, as this becomes more public and there's articles written, I'll share it so we have more talking points. But it's something that's important to look out for.
No, hey, that was great information, man, because I didn't know any of that information. And like you said, you kind of know about it as a lender you are, but kind of going through it with your last, situation. That's why it's important, people, to have a great lender. You can, Mr. Armond, the Giant Lender, go ahead and give me your information where they can reach you at again.
Yeah, absolutely. So it's The Giant Lender on Instagram, on all social media platforms. It's The Giant Lender. Shoot me a text or a call to my personal cell phone. This video that is coming from, it's 626-823-8278. And I was going to share an interesting statistic. I ran into an article the other day. This has to do about, it's like a pat on the shoulder for myself. This has to do with lending, right? So an average client that's buying a home with conventional financing in America, there was a study done that 8% of clients fall out of escrow because of a fumble or something comes wrong. So that means out of 100 buyers buying a home, 8 of them will be declined for a loan, right? So I did a calculation myself. I went and tallied up everything. I had over 900 transactions in a decade, not one declined loan. So that just shows, we get the solution done. So I don't want to guarantee it, but I'll tell you up front if you're going to be financed or not. And one way or another, we'll get the deal done.
As I know you, a very transparent man, a very honest man, a very genuine man, and he'll tell you, hey, I can't get this done right away if he can't get it done, but I haven't seen him not get anything done yet. Before we get out of here, because I know you're on your way to take care of some business, what are a couple tips that we could leave to some buyers or some sellers, just during this time right now, besides be patient and this is the new normal? What are some tips we can give them, or whether it's a buyer or a seller? You can pick either one or pick both.
Yeah. Buyers, I would say, think outside the box. So you are qualified. So a lot of times they're frustrated, like I don't have enough cash to put down. Tap into your equity, tap into your retirement accounts. You can actually get cash from different investment accounts, retirement accounts, where you could borrow against it, not pay penalties, not pay taxes, and use that cash as leverage to buy a home, to be able to get a lower monthly payment, and get into that desired home that you really want. Again, plan for it. Don't just jump in and pull all that money out. Reach out to an mortgage advisor. We'll run those numbers with you. We'll tell you, like, hey, you have that 200,000 that's tied up in a 401k. It's not earning you much. Yes, it's your retirement, but why don't we tap into it and build some wealth with it?
Yeah. Man, hey,
Yeah.
always great information with you. The giant lender himself will have all his information available in the description, man. I always, man, appreciate you stopping by and talking with us. And, I enjoy your conversation, and we got to get together soon. I appreciate you, Armond.
Absolutely. Good chatting with you, Trayvon.
Have a good day, man.
Take care. Bye.